It's been another strong week for corporate earnings, and the story they're telling is that profits are holding up far better than many expected. So far, third quarter earnings for the S&P 500 are up about 10.7% from last year, marking the fourth straight quarter of double-digit growth. That's the longest stretch we've seen since 2021. Tech, financials, and even utilities have all seen healthy profit gains, led by standout reports from Microsoft, Apple, and JP Morgan, to name a few, while Amazon numbers helped lift consumer stocks. On the revenue side, growth is nearly 8% year over year, the best since 2022, showing companies are still finding ways to drive sales even in a slower economy. At the same time, margins remain solid, above their 5-year average, which tells us that corporate America adapting just fine to higher input costs and global uncertainty. Now, not every signal is as bright. The latest manufacturing data came in soft, with the ISM index slipping to 48.7, suggesting factory activity is still contracting, but other indicators like the S&P Global Manufacturing Gauge at 52.5 and a steady consumer backdrop point to ongoing resilience. Put it all together, and the takeaway is this: profits are rising, the economy is still expanding, and markets are rewarding companies that execute well. In other words, beneath the headlines, the foundation for earnings growth remains intact, which continues to support the long-term case for staying invested. Thanks for tuning in. We'll see you next week with more insights.